We're now heading into the second half of 2021. So after rising 14% so far this year, what is the outlook for the S&P 500 for the rest of the year? Let's take a look. Wednesday marked the last day of the second quarter. Now we turn our attention to the third quarter and the second half of 2021. The stock market has done surprisingly well so far this year. While tech stocks have been a bit waffly, the Nasdaq actually posted a nice recovery to hit all-time highs. With the FANG stocks remaining relatively steady, that has allowed the S&P 500 to push into new highs as well. At this point, the S&P 500 has risen about 8% for the quarter and more than 14% so far for the first half of the year. Is it unrealistic to expect a repeat performance? Perhaps, but don't expect the path to be smooth. So, let's take a look at our charts to see what they say. Before we look at the S&P, we're going to take a look here at the Invesco Triple Q Trust Series 1, and the symbol is QQQ, and this is a 3-year weekly chart. Now, just to refresh, say going back here in late 2018, from that point on, if you kind of exclude the pandemic plunge, we've been running on a pretty good upward trend line. Now, as I indicated to you before, based on the MAC, here, we've got this top there, that top here, this run under the slow line, but a bottoming and a basing here at this level of 10, well above zero. I think this is going to start gaining further strength and continue on up, which means that the market, or at least the triple Qs, which is a pretty good proxy for the NASDAQ, means that the NASDAQ is going to continue on up. If so, that might take a bit of power away from the S&P 500, as when the Nasdaq wasn't doing all that well and the S&P continued to do well, I think things are going to reverse a little bit. Instead of value stocks, I think it's going to be growth stocks. And the growth stocks are basically in the Nasdaq as well as the Russell 2000. But value is not going to do too badly. And the S&P has enough tech stocks that I don't think it's going to do all that badly either. So let's go now and take a quick look at the S&P 500. And we're now taking a look at the 3-year weekly Spider S&P 500, and the symbol is SPY. Now, similar to the NASDAQ or the Triple Q, going back here to late 2018, from this point here, excluding the pandemic plunge, we moved up like that. We've had a pretty good run in the S&P as well. If you want to take a look at it in another way, we can do these channel lines with the lower channel line moving through here and the upper channel line moving up through like that. And we've been oscillating through this channel pretty well for not quite a year, but for several months. And I think we're going to continue. It may continue to the end of the year. We'll see. But right now, I don't see anything that's going to stand in the way. Moving down here, volume looks fine. Into the MAC, the only perhaps yellow flag is the fact that the fast line has come below the slow line. The fast line being black and the slow line being red. Now, we're still well elevated above that zero line, even above that level 10 here, which means there's plenty of strength to continue on. And regardless of the fact that the fast line has come below, say once, maybe twice, and again here the third time, the price chart continues upward, as you can see there, with very little volatility. Moving on down here into the histogram, you can see as well that we're not getting real too high, at least from these points here, and it doesn't come down here very low. So we're not too hot and we're not too cold. Perhaps even better visualized is the price rate of change above that zero line going all the way back a year to that point here, and we're not going above this level here. So we're staying in this positive territory above that zero line, but it's just not too hot and not too cold, going sideways. And as long as these oscillators can do that, stay in a moderate range and continue sideways for the most part, then the price chart's going to continue on up. Again, back here, moving through that mid or 50 line on the RSI, as well, staying here. We're not getting into this overbought territory, so it's not heating up too much. And we've only come down below that midline once here, and we're no near that right now. So I think we continue sideways, as well as shown in the stochastics and the Williams. Now, these are in the overbought territories, but that's okay. They can remain here for an extended period of time. Moving back up to the price chart, you can see that we've got a pretty good gig here, and I think it's going to continue. I don't see anything, at least at this point, that's going to provide an interruption in the continuation of the price chart. But we're going to keep our eye on that because something may peak out at any time. And if it does, hopefully we'll see it. But for now, it looks like smooth sailing. And for today, that's ChewDog Charts. Thank you.